Hello and welcome to our final Wells Fargo Economic Outlook video for 2024. We will discuss the outlook not only for the US economy but also for some key international economies. I'm Bennenbroek, a senior international economist, and I'm joined by my colleague Brendan McKenna, also a senior international economist. So Brendan, why don't we start with a big picture overview? What is our outlook for the international economy? And have we seen any significant changes over the last month or so?
Yeah, thanks, Nick. As far as our outlook for the global economy, we do expect a bit of a downshift relative to 2024, and we do expect that downshift to occur not only in 2025, but also in 2026. So just to put some numbers to that, we're forecasting 2024 global GDP growth of around 3%, give or take. For 2025, we're looking at an environment for global GDP growth of closer to 2.5%, and then a very similar global growth profile for 2026 as well. And we're looking for the US to kind of lead the charge on that downshift in global growth. And that's really a product of tariffs, more maybe economic policy uncertainty related to the new incoming administration, and then also just maybe a slowdown in consumer spending as well. So a slower global growth environment, Nick, for 2025 and 2026, and the United States is one of the key contributors to that. But Nick, I want to switch gears a little bit. We talked a little bit about the global economy, the US economic outlook kind of contributing to a softer global growth environment. Do you see any spillovers into the advanced economies as a result of slower US GDP growth?
Sure, Brendan. Yes, you did mention the slower US outlook, and we do see some spillovers to the global economy relating to that slower US growth outlook and some of the policy changes that are driving that as well. So there's a couple that I would want to mention, and I would say first of all, probably Canada is an economy that could be significantly affected by what's happening here in the US, with in particular the potential for these tariff policies potentially weighing on the Canadian economic outlook. So, you know, some of the things that we see happening in Canada, to be fair, I think the consumer looks okay, and over time the service sector is a little larger and the manufacturing sector is a little smaller, so that'll perhaps provide some kind of a cushion. But having said that, when you look at the economic exposure, I mean, Canada, 3/4 of the exports go to the United States, and that accounts for around about 20% of Canada's overall GDP. So if you're talking about slower US growth, for example, and if you're talking about potentially those tariffs being imposed from the US on some Canadian products, we do think that's going to mean slower growth in Canada. In terms of, you know, what that means in terms of numbers, we're looking at GDP growth in Canada this year of 1.3%, and only a very modest pickup in growth. Some headwinds that I'm talking about there, sort of 1.7% growth in both 2025 and 2026. And to give a sense of those spillovers, we had been looking at 2% growth plus, prior to the changed outlook for the US. I think the other region that I would mention that won't be as significantly affected, but would still probably feel some impact, would be the European economies, and in particular the Eurozone. Now there, you know, already we were seeing some deterioration in sentiment and some political uncertainty in both France and Germany as well. So a relatively muted outlook that had already been taking place. To be fair, the economic trade exposure is not quite as large. When you look at the Eurozone, exports to the United States only account for around about 3% of GDP. But when you kind of add some of these new uncertainties onto already local sentiment that was deteriorating, it does mean that, you know, we do have a subdued outlook for the Eurozone. After GDP growth of 0.7% this year, we're seeing only a small improvement up to 0.9% next year. So, you know, relatively muted outlook. So, you know, I talked about a couple of the major advanced economies where we had seen some impact coming from the changing outlook for the US. Perhaps looking at some of the emerging economies, Brendan, which I know you follow very closely, are we also likely to see some spillover in terms of the evolving outlook on any of those emerging economies?
I think we will see a spillover. And I think the emerging market economies in particular are a little bit more vulnerable and maybe even a bit more sensitive to tariffs and economic policy changes at the trade level coming out of the United States. But there are two economies that I do want to focus on a little bit more closely, and those are really China and then also Mexico. And I'll start with China, Nick. And the outlook for the Chinese economy is rather sluggish. There are just some structural underlying forces within the Chinese economy that are probably going to contribute to slower growth in 2025 as well as in 2026. But we're also looking at a scenario where we do think tariffs can contribute to a slower growth profile for China going forward. And the one thing I would say is we're looking at a scenario where China's economy probably grows in the 4% range for the next couple of years. Although China has some very unique policy mechanisms that it can deploy to kind of offset the impact of tariffs. And we do think that those policy levers eventually will be pulled over the course of the next 12 to 24 months or so. Those policy levers include accommodating managed FX depreciation to maintain trade competitiveness, and then also fiscal policy stimulus, and then also easing monetary policy as well. For Mexico, the outlook is a little bit more subdued. Mexico does not have the same type of policy levers that, say, China does. Monetary policy space is somewhat limited, and then also fiscal policy space is also somewhat limited as deficits are wide and debt burdens continue to grow. So we do expect Mexico's economy to slip into recession in 2025, and tariffs are a big reason for that, for those recessionary conditions in 2025. So Nick, I'll flip it back over to you. We talked about the outlook for G10 economies, the US economy, emerging markets. What do you see as far as changes to the economic outlook leading to changes in the monetary policy outlook for some of the advanced central banks?
Sure, thanks, Brendan. So yeah, I mean, we do think that looking at how the economic outlook is evolving, there will be changes in the monetary policy trends over the next couple of years. And you know, starting with the United States, we did talk about weaker growth, but also with those tariffs that we've mentioned, we could see higher inflation. So overall, we might actually see, looking at both of those together, a slower pace of Federal Reserve rate cuts than we had previously envisaged. And so our forecast is for those monetary policy interest rates, or the Fed funds rate, to fall by 100 basis points or 1 percentage point down to 3.75%. And that's kind of less than we had anticipated previously. We had seen sort of a more aggressive easing or larger rate cuts from the Federal Reserve. Now that's a little bit different than what we see with some foreign central banks, because as we kind of look at the outlook there, as we've already alluded to, we're probably going to see softer growth, but we're most likely not going to see the same kind, or certainly not the same extent of inflationary impacts from tariffs in those countries than we're going to see in the United States. So essentially, most of these foreign central banks or major central banks are really going to be more focused on the fact that the growth outlook is weaker. And so in contrast to the US, where we see slower rate cuts or less monetary easing, and quite a few countries or economies, we're actually anticipating that we're going to see faster rate cuts or more rapid monetary easing. So I'd highlight here the Bank of Canada has already reduced interest rates by 50 basis points at the last couple of meetings, and we think they're going to continue steadily lowering those interest rates as low as 2.5% by April of next year. That's quicker than we had previously thought. And similarly, when we think about the European Central Bank and what's happening with the European economy, we're also expecting a very steady series of rate cuts every single meeting through the middle of next year, a final rate cut in the second half of next year. We see the ECB's monetary policy rate falling to 1.75% also by late in 2025, more and faster than we previously thought. Reserve Bank of New Zealand would be another central bank where we see faster easing than before. So quite a few are dealing with faster rate cuts, and in general that's the overall trend. Just a couple of exceptions where perhaps still a more gradual pace of easing is more likely. The Reserve Bank of Australia and Norway Central Bank, the Norges Bank, are a couple where we see, you know, somewhat slower easing. So I guess to wrap up, Brendan, you know, we've talked quite a bit about the economic outlook. We've talked quite a bit about the monetary policy outlook, and maybe bringing those together in terms of what we're seeing happening with both economic growth and also monetary policy. How do you think that plays into the outlook for the currency markets and also the outlook for the US dollar over the next couple of years?
So we're actually very optimistic on the prospects for the US dollar. We think the US dollar can strengthen very broadly against the G10 currencies, but also probably most acutely against the emerging market currencies. And to your point, Nick, there's a couple of underlying factors or rationales for that. And the first just kind of comes back to monetary policy. As you mentioned, it looks like the Federal Reserve is shifting in a less dovish direction, while many of the other major G10 central banks, such as the European Central Bank, or maybe shifting in a more dovish direction. So purely from an interest rate differential perspective, we do think the US dollar can strengthen over the course of 2025 and into 2026. We're also looking at a scenario where the imposition of tariffs maybe creates some economic policy uncertainty that rattles global financial markets over the course of next year. With the US dollar still being the preeminent safe haven currency, you might actually see the dollar get a bit of a tailwind purely from market participants seeking out the safe haven qualities of the US dollar. And then kind of the third pillar for our underlying view for US dollar strength is really just kind of coming back to the economic challenges in China. As China's economy slows down and economic policy uncertainty kind of weighs a little bit more heavily on China, we do think the ripple effects of China's challenges can spread across FX markets and ultimately, again, provide a second tailwind for the US dollar. So it's a relatively optimistic outlook for the US dollar. And in fact, we do think the US dollar index can hit levels that it last experienced a little over 20 years ago back in 2002. Thank you, Nick. Appreciate your insights, and we'll have to leave it there. Just to summarize, we do expect a softer global growth outlook in 2025, a bit of a monetary policy divergence between the Fed and some of the major G10 central banks around the world, ultimately leading to a stronger US dollar against advanced currencies, but also emerging market currencies. Thank you so much for everyone for listening. We hope everybody has a happy holiday season and a happy new year. And until next time, thank you.